next term is stock or inventory. What do you mean by stock or inventory?
The goods which remain unsold.
The goods which remain unsold. That's very, very correct. Okay. So whenever like you need to define this term stock or inventory, right? So yes, rightly said, the goods lying unsold with the business entity is stock. The term stock refers to the value of goods remaining unsold. You need to use these words so that any examiner will be giving away the marks to you, right? So the value of goods remaining unsold at the end of the accounting year with the business entity is termed as stock. In case of a trading concern, in this paragraph, in this particular line, we are going to learn that how many type of stock can be there. For a trading concern, it may be the unsold goods lying with the business entity at the end of the year, and this is what we call it as stock in trade. Okay, stock in trade is the term used for trading concerns only, right? Bear with me for my writing, please. And after that, if it is a manufacturing concern, for that we have three different type of stocks. One is raw material, other is work in progress, and third is finished goods. So basically we have four type of stock with us. In case of trading concern, it is stock in trade. In case of manufacturing concern, three types of stocks is possible. The raw material which is purchased by us for converting into finished goods, so that's a raw material. The stock of raw material can be there with us. Second is the work in progress for semi-manufactured goods or partly manufactured goods, the goods which are already into the process of manufacturing. So stock uska bhi to ho sakta hai, so that is work in progress. And third is finished goods. So finished goods which are already ready for sale. So even the stock of that thing also, correct? So stock is simply not like just one stock, but four different type of stocks are there. You will have to memorize this. Stock may be of two types. One is opening stock, other is closing stock. When I have to define opening stock, the opening stock will simply mean that the goods lying unsold with the business entity at the beginning of the accounting year. Closing stock is something which relates to the goods lying unsold at the end of the accounting year. Opening stock in the beginning of the accounting year, closing stock at the end of the accounting year, right? The date, if you want to specify, you can mention the date over here. One is like for closing stock, it can be 31st of March, say for example 2020. The goods lying unsold, correct, as on 31st of March 2020, at the end of the accounting year will be my closing stock. And if it is like 1/4/2019, let us take like that, the current accounting year 2019, correct? So as on 1/4, what are the goods are lying unsold with the business entity? That will be opening stock. One needs to remember the fact that the closing stock of any year will become the opening stock of next accounting year. Okay, 31st March ke baad, the date is going to be 1/4 again. 1/4/2020 is the first date of the new accounting year. So the same closing stock, whatever the amount of goods is over here as on 31st March 2020, will be the same stock carried forward as on 1/4/2020, right? So closing stock of any year will become the opening stock of next accounting year. Apart from this, we also need to remember that where do we write this stock? Stock is basically classified in the balance sheet under the head current assets. Stock is one of the current asset because it keeps on fluctuating with every transaction in business, with every purchase, with every sale, right? Every returns, the value of the stock will keep on fluctuating. So it is a current asset. Important feature for stock is this one marker, very, very important question, that we are going to value the stock at its cost price or at its market price, whichever is less. It is always valued at cost price or market price, whichever is less. And why are we doing so? Because we are going to follow the principles in accounting, and one of the very, very important principle, okay, that is principle of prudence, conservatism. This concept asks us to write the value of the stock at cost price or market price, whichever is less. The next term for the day is trade receivables. Trade receivables will include two terms. One is debtors, other is bill receivable. The term receivable itself says that the amount is receivable because of the goods sold on credit. because of the services that we have rendered on credit, the amount is yet to be received from the person, from the firm. So those firms or those persons will be termed as trade receivables. And this is a term which has been used in the revised Schedule 6 to the Companies Act 1956. The first time introduction of this term was almost a decade back, wherein like this term was introduced, and it was used in revised Schedule 6 of Companies Act 1956. But now the Companies Act 2013 is there. So this act now has adopted the term and shows both the terms together, debtors and bill receivable, right? What are trade receivables? As I told you, trade receivables are those persons or firms to whom either the goods or the services have been rendered on credit. Goods are sold on credit or the services are rendered on credit, and they also have agreed in writing to pay the specified amount at a future date when the term credit comes. So yes, we need to collect the payment after the expiry of the agreed time period. Okay, so that is what is all about trade receivables. Let us see the terms individually, the debtors and the bills receivable. Debtors के लिए I have already given you one term, a very simple term, that is customers, right? These are customers. Easy way to remember the term. Customers कौन होते हैं? To whom the goods are sold. So never in confusion if you remember the customer as debtors, right? These are the firms or the persons to whom the goods are sold on credit. And these are the people, those who agree to make the payment after the expiry of a specified time period. Okay, that's a point over here. And where do we show? Where do we show these debtors? Debtors are shown in balance sheet. In balance sheet on the asset side under the head current assets. Okay, debtors are to be shown in the balance sheet. In the balance sheet on the asset side under the head current assets. You are given an example over here. Okay, why are these debtors with us? Because the amount is yet to be paid by them. Business, they owe to the business, right? Till they make the complete payment, okay, of the amount due towards them, okay, they will be called as debtors. An example has been given to you over here. If I have sold goods to Ram on credit of rupees 5,000, so Ram becomes my debtor till he clears the full amount, right? And once he clears, he is no more a debtor to me, correct? So this is what is all about debtors. Next is bill receivable. Bill receivable is one of the negotiable instrument actually. Okay, what is the practice in general? Suppose A has sold goods to B. A sold goods to B. So what is A? A is a seller and he will be drawing a bill on B. Drawing a bill on B matlab he will prepare a bill. Okay, because it's a credit transaction. Okay, so B has agreed to make the payment after 1 month. Okay, so A will prepare a bill and send it to B. On the other side, B ka duty kya hoga? B will accept that bill. Acceptance of the bill is nothing but putting the signature. It is required. Okay, putting the signature, accepting the bill that he is going to make the payment of the bill after 1 month. So pehle A has to send the bill to B. B will put his signature and B again will send the bill to A. That's a process. Now for A, the bill that he receives back after the signature from B, right? So that bill, he knows ki the amount is yet to be received for the bill. So it is termed as a bill receivable. And the same bill for B, who has accepted that he is going to make the payment, for B, it will be termed as bill payable, right? For A, it is bill receivable, and for B, it will be bills payable. These are the two terms which I'm going to go through just now. Okay, the one is bill receivable. Let us go through it. A bill of exchange is written by the seller. A was the seller, so A will write it. On the buyer, B was the buyer, directing the B to pay the specified amount at a future date. Likha, sari details likha. Now what is to be done? A bill of exchange becomes a bill receivable for the seller only after getting the acceptance from the buyer. मतलब A and B का example जो दिया था, once B accepts it, once B puts a signature on the bill, then and then only that bill of exchange will become a bill receivable for A. Where do we show this? Bill receivable is a part of the current asset. Okay, and current assets are shown in balance sheet on the asset side. Now we have trade payables, the next term. This is simply going to be the opposite of trade receivables. Receivables हमने ये देखा था कि the amount is receivable for the goods sold on credit or the services rendered on credit. Just the opposite of that over here. If we have purchased goods on credit, if we have acquired the services on credit, okay, together the amount which is payable, okay, so that is termed as trade payables. Again, the same story for trade payables as well. This was a term first introduced, okay, in the revised Schedule 6 of the Companies Act 1956, and now in Companies Act represents both the creditors and the bills payable. The same thing what we have discussed for trade receivables. Trade payables are those persons or firms from whom we have either purchased goods on credit or procured a service on credit. Right? We have procured and then we have accepted that we are going to make the payment of the goods or the services acquired on some future date. Okay, we have accepted. That is what the important word is over here for the payables, right? Individually, the two terms creditors and bills payable. Let us see this. Creditors are the persons or the firms from whom we have purchased goods on credit, right? They will be our creditors till we settle the account of theirs, okay, till the time we make the payment to them, okay. So it's a purchase of goods or procured services on credit from the person or the firm. So these are creditors. They will continue to remain our creditor till we clear their account by making the payment. जब तक payment नहीं किया तब तक वो हमारे creditors हैं, right? For example, if we have purchased goods from X and company worth rupees 10,000, so he is our creditor for rupees 10,000, right? But if we have paid rupees till date, so 10 minus 3, that will be 7. So X and company is still a creditor for the remaining amount due to them, that is rupees 7,000. Okay, so I'm sure like the meaning is getting clear for debtors and creditors. Now, where do we show creditors? Creditors is a current liability and it is again a part of the balance sheet, right? In balance sheet, it has to be shown under the head current liabilities. Inventories, stock, a current asset, balance sheet. Debtors, again balance sheet, current assets. Bill receivable, again current assets, balance sheet. And now it is creditors, a liability, a current liability. Okay. Next is bills payable. Okay, over here again, let me take the same example of A and B. A has sold goods to B. B is a buyer. Okay, being a buyer, he needs to accept the bill. Accept करने का मतलब I already told you. He just needs to put his signature on the bill so that it becomes a legal document. And B knows that for this bill he has to make the payment, so it becomes a bill payable. Bill payable for B. Right? Where do we show this? Again, it is to be shown in balance sheet on liability side. A very simple memory. You can memorize it. Whatever the amount is receivable, it's an asset. Whatever the amount is payable, it's a liability. Okay, let us see this. The buyer of the goods or services who accepts the bill of exchange drawn by the seller becomes drawee of the bill. We are going to learn these terms again in the chapter bills of exchange. On the acceptance of the bill of exchange, it becomes bills payable for B over here, right? For the drawee, for the buyer of the goods or services. And where do we show? It is in the balance sheet on the liability side under the head current liabilities. Goods. Who will tell me the meaning of goods now?
Are the product with which the firm is competing or dealing.
The firm is dealing. That's very correct. जो भी particular item का product का जो business करते हैं, okay, the particular firm deals in with the motive of earning profit. That is goods. Various examples have already been giving you every now and then. Mohan Stationery Mart, Mohan Furniture Mart, Mohan Clothes Store, right? So अगर मोहन स्टेशनरी मार्ट है So for Mohan Stationery Mart, the items like pen, pencil, eraser, sharpener, notebooks, books, everything will be the goods for him, right? And if it's a Mohan Furniture Mart, so he will be buying the furniture, the tables and the chairs, and the sale of the table and the chairs will be the items that he is dealing in. So those will be goods. And again, like if it's a Mohan clothes store, so buying and selling of clothes material for the purpose of earning some profit, so that will be goods for him, correct? So goods are the products or the items in which the business entity deals in with the motive of earning profit. Deal करने का मतलब है buying and selling या manufacture करके sale करना, anything, right? So goods is referred as the products in which the firm is dealing, buying and selling बोल दो या फिर producing and selling it, anything. For example, a firm dealing in furniture buys chairs and table. It's a goods, no doubt about that. And if a firm is dealing in hardware items, okay, and if they buy a table and a chair, it will be considered as an asset, not the goods, right? Similarly, stationery items are goods to a dealer of stationery. But for a firm dealing in electrical appliances, it is an expense, not the goods. ठीक है, कोई electrical appliances वाला कोई books and notebooks खरीद के आता है for the record of the business transactions, so that will be an expense for him, not the goods. So you need to understand that कि goods is only referred to the items that the business deals in, purchase and sale या produce and sale. Cost is another term. Cost is something that the amount that we pay, the amount that has been spent, okay, for what purpose? Okay, for a particular product, for manufacturing a particular product, or for a particular activity. Voucher. Before I go with the term voucher, okay, one more term is there, source document. Any idea about the term source document? Because जब भी मैं वाउचर की बात करता हूँ तो स्टूडेंट्स डू कम अप विद आंसर्स लाइक कि सर वो गिफ्ट वाउचर मिलता है. नो, आई एम नॉट लुकिंग फॉर दैट आंसर. If you purchase so many things, so you are given a gift voucher, you can come and redeem at any point of time. No, I'm not talking about that voucher over here.
Sir, voucher is the evidence of the business transaction.
Okay, I'll give you some simple example. You tell me, bill.
They are the vouchers.
What will be this bill for purchase? Will it be a voucher? Will it be a source document?
Sir, I think it is a source document.
अभी तो आप बोल रहे थे voucher है.
Sir, I'm little bit confused.
Little bit confused. Yes, you should be. Okay, this is the beginning of class 11, so we need to be very, very clear with these basic things. Okay, so yes, you were right with your confusion that key bill receivable, okay, bill of purchase. Okay, this bill of purchase is a source document, not a voucher. But in general, आप किसी से भी पूछो ना, किसी से भी कि written evidence of a transaction, that's a voucher. बिल परचेज किया voucher है, हाँ. हमने किसी को पेमेंट किया, सामने रिसिप्ट मिला, हाँ, that's a voucher. Okay, but नहीं, ऐसा नहीं होता. Okay, there is always a difference between the voucher and the source document. So source documents are basically the original documents as an evidence of a transaction. This bill of purchase, suppose I have purchased goods from Ronak, right? So Ronak will give me a bill, right, for the same. So that bill of purchase is a source document. Against the goods purchase, if I make a payment to Ronak, so he will be giving me a receipt of the amount received by him, right? So that is a source document. Okay, so whichever the original document is there of a particular transaction, that is a source document for me, right? For example, if I deposit some money into the bank, right? So for depositing money into the bank, we use source document that is termed as pay-in slip. Pay-in slip use होता है ना, wherein we write all the details and give it to the cashier. He will just count it and put a signature in the stamp of the bank, right? So that happens. So that's a source document. That's the original evidence of a transaction. So these are all the source documents, and based on these source documents, one has to prepare. Who will prepare the voucher? The accountant will prepare the voucher on the basis of the source document. For cash transactions, we will have cash memo. For credit transaction, we will have invoice or bill. For payment of the cash, we'll have a receipt from the other party. In the same way, if any customer has paid the amount to us, we will be issuing him a receipt. For depositing anything into the bank, either a check or a cash, we have that pay and slip with us. So for every small transaction in the business, we have one or the other source document. अब सोर्स डॉक्यूमेंट के बाद आता है वाउचर. ओके, तो वाउचर को कैसे डिफाइन करोगे आप? वाउचर इज समथिंग व्हिच इज प्रिपेयर्ड बाय द अकाउंटेंट. What is accountant supposed to do in this voucher then? So he is supposed to mention the account that needs to be debited and the account that needs to be credited in the books of accounts based on the source document. Okay, let us see this. A voucher is a written document prepared by accountant. Okay, what is he doing? Providing the evidence of a business transaction. ठीक है? The evidence of a business transaction, जो original evidence है, is called a source document. That is cash memo for cash transactions, a bill for a purchase or a sale. It can be there. When we deal with the bank, the deposit in the bank, we have pay and slip. Okay, so these are all the source document, and voucher is a written document which is prepared by the accountant. Vouchers are always in the printed forms of the firm. Any firm will have the voucher with them. And what does it specifies? It specifies the accounts to be debited or credited based on the rules. Rules we are going to learn in chapter number 5. On the basis of the vouchers, the transactions are recorded for the first time in the books of accounts, whether it is journal or subsidiary books. If there is no voucher, no entry to be recorded in the books of accounts, because we already have learned something about the qualitative characteristics of accounting information. Reliability, if you remember. Reliability, the accounting information will be reliable only when every transaction, every entry in the books of accounts is well supported with the voucher, right? As accounting entries are passed on the basis of vouchers, so normally we call it as accounting vouchers, and the source document of each transaction is attached with the voucher for reference in the future, right? And all the vouchers are serially numbered and signed by its maker. Two signatories are there. One is the accountant who prepares it, and second is the authorized person, right?